Hello, I'm Matthew Hopkinson. I'm the Chief Commercial Officer at Income Analytics. So essentially what we're providing is an analytics and scoring on the income risk profile at the asset and tenant level. And the importance of this is on the basis that actually the value of real estate is directly apportioned, with over 70% being related to the quality and duration of the income. So understanding the income stream is fundamental. So at the asset report level, what we do is we've created uniquely a number of key scores, and these are updated daily, and we use Dun & Bradstreet as our back-end data feed, and these go into a series of income analytics algorithms in the cloud and are updated daily. And about 385 million bits of data are being updated in the system across the 420 million companies that we analyze. The first thing that we do is we've got the INCAN's weighted global score, which in this case you can see is 63. So that's 63 out of 100, 100 being amazing and 1 being on sort of death row. So in terms of where you sit. What we then do is we go into a piece of data, which is the failure scorecard. And all of this, if you remember, is sort of quantitative data. So this is the actual outcomes of companies that fail. And we take the 1 year probability of default and we apply that into the Standard & Poor's model to create an equivalent or synthetic bond rating. So when I take the risk score on this asset, which is combined by all the tenants, which we'll look at in a minute, it comes up here to give me an equivalent bond rating of BB+. The other thing that we're able to do when you have an asset is you have a number of tenants, which we're going to look at shortly. And when you look at the risk profile of all those tenants, I'm able to tranche the income, as you can see here, to see that breakdown. And of course, as the tenants one change or the fortunes of the tenants change, this is constantly changing. So this is very important in terms of understanding the changing risk profile and indeed the value of that building in its lifetime. The other thing that we do is we take that risk score, the 1 year probability of default, and then we've gone back to 2007 and 8 and analysed every single company, and in this case, the UK, there's about 14.4 million, every day to look at the actual outcomes of this company, this score, and this sector as to how many failed and at what point in time. And that enables us to give that 10-year projected probability of failure, which is cumulative. The final thing that you see on here is that when you look at it, you're able to look back historically 2 years to see how that global score has changed over time. There are other bits of basic information, such as where the building is, which is straightforward, the rent and the ERV. The equivalent bond rating, again, you get that historical analysis over 2 years, and you can look at it mapped to Moody's and Fitch. And then when we look at the tranching, we've seen here earlier the cash value, but I can look at the percentage breakdown as well across those different tranches, which is fed by all that tenant data. So we've then got a whole series of tenants in this particular asset. And what we're able to do is by looking at the global parent, so this is a key part of the Dun & Bradstreet system, the Duns number, we can look at the true exposure here by global parents, nationality, industry and sector. And again, when you look at multiple tenants and multiple assets, this becomes increasingly important to really understand your counterparty risk. And indeed, whether the global parent is likely to support the child, as it would company, which might be on your lease, should it get into difficulties. We then finally reach the tenant summaries. And what you're seeing is essentially a mirror of what you saw at the asset level. So we've got the global score here. We've got the equivalent bond rating. We've got the 2 year history of the global score, and we've got that projected cumulative probability of failure. And you'll see here quite a mix. Now, all of these have been rolled up, weighted by their rental contribution to the asset, to that asset score. But you can see here a whole variety of different scores and situations which are going on in this particular asset. And there's quite a few tenants here. But that essentially is what we do, is we create this ability for you as investors and landlords and banks and property professionals to actually understand, based on the rental income, what is the true risk associated with it, and almost in a Google Translate way, how would it map out into other asset classes such as fixed income.